Ever notice how Bitcoin's price can skyrocket or crash overnight? One of the biggest reasons is money printing. When governments create more money, like the US dollar, it affects everything, even digital currencies. The key is something called the M2 money supply, which measures how much money is circulating in the economy. When the Federal Reserve prints money, it's really increasing M2, not just cash, but also what's in your bank account. More money in the system usually means each dollar is worth less. That's inflation. As inflation rises, people look for safer places to store their wealth. Places where the supply can't be changed at will. Enter Bitcoin. Its supply is fixed and predictable. No one can create more out of thin air. That's why investors watch M2 closely. When traditional money feels unstable, Bitcoin looks like a safe haven. For many, Bitcoin isn't just a gamble. It's a way to escape a system they see as broken. The link between money printing and Bitcoin is about trust, scarcity, and protecting value. Let's break down how this all works. So what is M2? It's a broad measure of all the money you can easily use or access. It includes cash in your wallet, money in your checking and savings accounts, and even some short-term deposits. If you can spend it or turn it into cash quickly, it's part of M2. Think of M2 as the total pool of spendable money in the economy. Economists watch M2 to gauge the economy's health. A steady M2 means stability. A sudden spike can signal trouble ahead. That's why investors track M2. It's a snapshot of how much money is being created. When M2 jumps, it's a warning sign for inflation and a cue for many to look at assets like Bitcoin. How does M2 get bigger? Mostly through central banks like the Federal Reserve. When the Fed lowers interest rates, borrowing gets cheaper, so people and businesses take out more loans. Banks create new money digitally when they issue these loans, expanding M2. Another tool is quantitative easing. When the Fed buys assets from banks, it creates new money and injects it into the system. These actions are meant to boost the economy, especially during crises. But when too much new money is created, it can devalue the currency. That's inflation. More dollars chasing the same goods means each dollar buys less. This is why people worry about money printing and look for alternatives like Bitcoin. Here's where Bitcoin stands apart. Unlike dollars, Bitcoin's supply is capped at 21 million, forever. This rule is hard-coded. No one can change it, not even governments. Bitcoin's scarcity is like digital gold, rare, predictable, and immune to policy changes. New Bitcoins are created through mining, but the rate slows over time, making it even scarcer. In a world where central banks can print trillions, Bitcoin offers certainty. That's why people worried about inflation turn to Bitcoin. It can't be devalued by money printing. Gold used to be the go-to safe haven, but now Bitcoin is the digital alternative. Its value comes from its network, security, and fixed supply. When trust in fiat money fades, Bitcoin's unchangeable limit becomes its biggest strength. It's a direct answer to the problems of modern money. Let's look at 2020, a real-world example. When COVID-19 hit, central banks printed record amounts of money to keep economies afloat. The US M2 supply jumped by nearly 25% in a single year, a quarter of all dollars ever created. Investors saw this and worried about inflation, so they looked for safer assets. At the same time, Bitcoin's price soared from under $10,000 to over $60,000. The timing wasn't a coincidence. As money printing surged, so did demand for Bitcoin. Big institutions and everyday people bought Bitcoin as a hedge against inflation. While other factors played a role, the explosion in M2 was the fuel for Bitcoin's rally. When fiat money supply goes vertical, capital flows to scarce assets, and Bitcoin is the scarcest of all. So, what does this mean for the future? M2 is the pulse of the traditional financial system. When it spikes, it signals stress and heavy intervention. In these moments, Bitcoin acts as an escape valve, a lifeboat for those losing faith in fiat currency. Bitcoin is volatile, but its long-term appeal is its fixed supply. As long as governments respond to crises by printing more money, Bitcoin's case grows stronger. Each round of stimulus or quantitative easing is an ad for Bitcoin's scarcity. It's a rebellion against the power to devalue savings with a keystroke. Bitcoin's price often rises when money printing accelerates because it's seen as the antidote. M2 is infinite. Bitcoin is absolutely limited. For many, Bitcoin isn't just speculation. It's financial insurance in an era of endless money creation.